only 13% of veterans ever use their VA home loan benefit. That means 87% of those that have served their country are walking away from one of the most valuable financial tools they've ever earned. Why? Because too many don't understand how it works. I see it all the time. Veterans who thought homeownership was years away, blown away when they realize they can buy a home with zero down, no mortgage insurance, and lower interest rates than civilians. On a $350,000 home, that's $17,500 you don't have to save before moving in. That is real money that stays in your pocket.
You're kidding.
But here's what most lenders won't tell you. There are strategies that you can save thousands more. If you're a veteran, active duty service member, or even a surviving spouse, you might already qualify for this benefit and not even know it. So today, I'm breaking down exactly how VA loans work in 2025 so you can take advantage of what's yours. Let's start with eligibility. If you've served at least 90 days on active duty, 181 days during peacetime, or 6 years in the National Guard or Reserves, you probably qualify. If you're a surviving spouse, you might qualify too, but don't even realize it yet. All you need is your certificate of eligibility, and your lender can usually pull it within minutes. Once you're approved, here's what the VA loan sets itself apart from any other mortgage. The VA itself doesn't lend the money. Instead, they guarantee your loan, covering 25% of the loan amount against default. That reduces the risk for lenders, which means better terms for you. Zero down payment, no mortgage insurance, lower interest rates. Compare that to a conventional loan where you'll need at least 3% to 5% down and 20% down just to avoid mortgage insurance. With a VA loan, you can skip all of that. No waiting years to save, no throwing away money on rent, and you don't assume that you need perfect credit. The VA itself doesn't actually set a minimum credit score. Most lenders look for 620 or higher, but some approve as low as 580 if you meet other requirements. With compensating factors, your credit score could be even lower. Even better, VA loans focus more on residual income, which is the money left over after major expenses. So past credit issues aren't an automatic deal breaker. Now let's talk about the VA funding fee, because this is where a lot of people overpay. Unlike conventional loans, VA loans don't require monthly mortgage insurance, but they do charge a one-time funding fee to keep the program sustainable. For first-time VA loan users, that fee is 2.5% of the loan amount. If you're using the VA loan again, it's 3.3%. But here's how to cut that fee down. Put down just 5% and it drops to 1.5%. And if you receive VA disability compensation or have a Purple Heart, you're exempt. That's right. Even with a 10% disability rating, you are exempt from paying the VA funding fee. So that's zero down, no PMI, and no VA funding fee. The closing costs? The VA limits what fees you can pay and allows sellers to cover your closing costs with seller concessions. If seller concessions cover all of your closing costs, you could purchase a home for $0 out of pocket. That is a huge advantage when negotiating your purchase. Now let's clear one of the biggest myths. You can use your VA loan more than once. Absolutely. You can reuse your VA loan benefit for life, and in some cases, even have more than one VA loan if you qualify under the remaining VA entitlement rules. This is how veterans build real estate portfolios, buying homes at each duty station and keeping them as rentals instead of wasting money on rent. Let me show you how this plays out in real life. Captain Rodriguez, an Army officer, got orders to transfer to Fort Bragg. She found a $320,000 home, but only had $8,000 in savings. A conventional loan would have required at least $9,600 down, plus another estimated $6,000 in closing costs, way more than she had. With a VA loan, she bought with zero down, rolled the funding fee into the loan, and got the seller to cover the $6,000 in closing cost. Her total out-of-pocket cost, $0. 3 years later, she got orders to Germany. Instead of selling, she rented the home to another military family, covering her mortgage while building wealth. When she returned stateside, she used her remaining VA entitlement to buy again. If you have perfect credit, a large down payment, and are not exempt from the VA funding fee, then conventional financing might be a better option. But for most veterans, VA loans offer the best path to homeownership. To maximize your benefit, work with a VA loan specialist who understands the process inside and out. Homeownership isn't just about having a place to live, it's about equity, stability, financial security. This is one of the best benefits you've earned. Don't leave it on the table. Drop questions in the comments. I read as many as I can. If you want to learn more about VA loan entitlement and how to purchase multiple homes with your VA loan, then you need to watch this video right here. It covers everything you need to know about VA entitlement and using your VA loan multiple times. Most importantly, thank you for watching and thank you for your service.